All right, so right now I'm on the settings. So we added a new section, the settings for integrations. This is where all of our integrations in the future will show up. Obviously, right now it's just QuickBooks. You can click the settings. So I already have one linked. I'm not going to walk through a linking only because it's such a simple process, and I think anybody could easily figure out how to do it. It's just a button on the bottom that says connect, brings you right to your QuickBooks system. They sign in, it brings them right back to here, and then they can edit the settings once they have that account linked. So to explain that, so when you link QuickBooks, it establishes that link, and then if you do unlink it in the future, there's some operations that happen in the background because we're not only establishing a link to their QuickBooks system, but everything that gets synchronized between our system and QuickBooks gets a link established there as well. So we know what it is in the QuickBooks system related to what it is in our system. So when you unlink, when you break that link, we basically destroy all of the links between all of the items. The idea is that you're trying to reestablish a different link or whatever it may be, but that destroys the link to everything else. And it lets them know if I click this, it's going to tell me hey, this will unlink all synced items and cannot be undone. I'm going to go to the settings here. And now I've already set up the whole settings for this. And the settings is the most important part of this whole integration as far as how a user actually gets in and starts using it. And it's like the number one priority. So once you create that link, you'll be shown the settings. And there's a few things here that are required, as you can see, and it won't even let you save the settings until you've selected those. So for example, income account, expense accounts, products. So just to briefly explain these, now a person that's using QuickBooks would probably understand this a bit more because they're going to know, what's a product in QuickBooks. You can hover over everything in this dialog and see what it means. So in this case, it's the income account used when it needs to create a product in QuickBooks. The expense account is similar, but it also is used for syncing direct costs back from QuickBooks. And I'm going to go over all this in this demo as well. There's commitments. So syncing projects, one thing I should mention, we synchronize projects. So QuickBooks has a concept of projects. Only Plus or Premium users have this feature. We cannot create them. So you'll see this note on the top here. It's telling them we've enabled the sync projects is enabled, but QuickBooks does not allow us to create projects, doesn't allow anybody to create projects. So any system that's going to be integrated with QuickBooks Online will have this restriction. So what this means is that they have to create that project in QuickBooks and then link it to a project in our system. This is optional, but if they want to use the projects functionality, they have to do this. Now the projects it's really just a categorization in QuickBooks. It allows them to have all these costs and everything get associated with just the project rather than the customer of that project. And then the customer of the project, it kind of rolls up to them. So if you don't sync projects, it just synchronizes to a customer for certain items. There's some items that don't even sync back to customers. So without inundating you with too much information, the projects is an optional thing. But if they don't use it, they lose tracking that they would otherwise have if they synchronize projects. As long as they have Plus or Premium, we should recommend this. It's unless they already use QuickBooks, they don't want to use projects for some reason, then it's fine. It's not required. Commitments. So I'm gonna send an email after this with what links to what, like the actual mappings of each of them. I know somebody asked for that. I just figured I'd wait till after the call. But if you hover over each of these two, it'll tell you. So commitments links with QuickBooks purchase orders, contracts syncs with QuickBooks estimates, payable invoices with bills, receivable invoices with invoices, direct costs with expenses. So you can turn on and off any of these. It really just shows or disables the button to actually synchronize an item once you've created it and approved it. We have export single cost code. So this is an option that I suspect a lot of people will probably use because most people aren't managing their QuickBooks expenses and invoices and everything at a cost code level. So they're not putting in on their invoices, they're not putting general contracting and architecture, whatever all the broken down costs are going to be. They're usually doing rolled up costs into a single cost code line. So checking this just lumps all the line items into a single product when exporting commitments, contracts, change orders, and costs to QuickBooks. So if I have 5 line items on a commitment and I sync that to QuickBooks, it's going to create a purchase order with a single line item that is that is this here. So I'll show you that in a second. But there's one line item that'll be on that purchase order, and it'll be the whole cost for the commitment. The line item that it creates is this default export income product and default export expense product. So products in QuickBooks are what you charge somebody for. So if you put a line item on an invoice or a purchase order, you have to select a product that the charge is for. So by selecting this default, we guarantee that we know exactly what product they want us to create in that invoice. And so if I just click change here, now this will take a second because we're reading data from QuickBooks and we're kind of at the mercy of QuickBooks' speed, but this is a pretty uncommon thing. They're going to do this one time and they're pretty much going to save and never do it again. But you'll see that it gives me a drop down and I can pick from my products on QuickBooks. So if I go over to QuickBooks here for a second, so products in QuickBooks are related to groups or cost codes in our system. So you'll see this list here: general contracting, hours, sales, and subcontracting. So I just created 2 of these here. I created the general contracting and subcontracting items or products just to demonstrate how a single export would work. So a person who wanted to just export all their stuff or import all their stuff into a single line item. So as you can see here, I picked general contracting, which means my income products, anything that exports into QuickBooks that is an income or a receivable, will use this product. So for example, if I synchronize a receivable invoice, so an invoice to a customer, the line item that it creates will be general contracting. So the charge that goes to the owner will be a single line item of general contracting. Now, remember, this is because I have export single cost code checked. Similarly, you have an expense product. So if I were to export a payable invoice or a commitment, this would use the expense product. And you can hover over this and see product used when syncing commitments, commitment change orders, and payable invoices. Again, the same concept. It's going to create a single line item for subcontracting with the total cost of the item, whether it's commitment or invoice. So the export single cost codes is an option. So if I uncheck this, you'll see I get another option. I get link cost codes, and it'll tell me cost codes sent to QuickBooks which are not linked to QuickBooks products will map to the default export and export income and expense items. So this means that if I do not link my cost codes, so if I click link ERP cost codes, it's going to give me a dialog which I can then link my QuickBooks items with my internal cost codes. So by doing this, I'm basically doing the work that the system needs to know, okay, when I export to QuickBooks, it should create a general contracting item when it has this. Now it's a 1-to-1 relationship. So there's only 2 ways to do this. You can link your cost codes 1-to-1 between QuickBooks and our system, or you can choose to roll them up into a single cost. If they do this, it's a pretty simple process they can go through. They can select what item in QuickBooks or what product in QuickBooks links to what cost code here. And whenever they, for example, if they import a cost from QuickBooks that is general contracting, and my list is pretty simple here. Some people are going to have hundreds of things listed here from QuickBooks, hundreds of products. But what this means is if I import, let's say I import a cost from QuickBooks for general contracting, if I tell it here, well, I want that to link to this general contracting in our cost code system, when that synchronizes back, it will actually link it to that cost code rather than using the default cost code. In this case, the default cost code is general contracting, but rather than using the default. So there's these defaults in the system basically to allow them to not have to link everything. So if they only want, like, let's say in QuickBooks, they only use a couple different costs or a couple different products, and they have a specific set of costs that they want that to link into in our system. They can just link those, and then anything else, maybe they have some weird costs on a project that they don't usually have, that will just link to the default. So they have it, so it syncs back still, basically, is the point. It doesn't just ignore this because we don't know what cost code this cost should link to. It actually will use the default and give it a way to show up in the budget. So moving on to the next part is the syncing cost from cost code. So I have our syncing cost from QuickBooks. So I have this enabled. What this means is it will sync expenses and time activity from QuickBooks into the direct costs on the project. This requires that sync projects is enabled. So if I disable sync projects, I'm not going to be able to sync costs from QuickBooks. And then import costs into single cost code. So we have two different single cost code things here. One of them is when you're sending stuff to QuickBooks, you can merge all the items into a single cost code. And the other one is when you're importing from QuickBooks. So if you're synchronizing your costs back from QuickBooks, you can choose for it to link to a single cost code as well. Or if I choose to not do this, you'll see it's telling me products imported from QuickBooks which are not linked to a cost code will use the default cost code and default cost type. If they are linked, it will use the default cost type because QuickBooks does not have a concept of cost type. So everything imported will use the other cost type, but it will use the linked cost codes from this system. So it'll look at the linked cost codes, determine, is this cost being imported linked to a specific cost code? If so, we're going to import it as that cost code. If not, we're going to fall back to the default, which in this case is general contracting. All right, so that is the settings in a nutshell. I mean, there's really not much more to it. It's probably, there's a lot to understand here, but we tried to make it as easy as possible with these hover actions so they can see exactly what each of the things do and what they mean. So I'm going to move on to the actual integration stuff. So once you have that integration established, you're going to have quite a few buttons show up. So I'm going to link this to a QuickBooks project. So I'm on a project that I created as a demo here. And you can see that I have on my project details, I have a link to ERP button because this project is not linked to my ERP system yet. So I'm going to click link to ERP. That's going to load for you to select your ERP project from your system. And here I'm going to pick my QuickBooks demo project. But linking it to the ERP system now just makes it so all of the costs that are entered in on this project will be associated with that project in QuickBooks rather than just the customer or a single customer. All right, so I'm going to go to contracts here, and I've created a couple just base items. So I just created a couple line items, and this item is not synced to ERP yet. So once you create a contract and it becomes approved, you see the sync to ERP button. If it is not approved, you do not see the sync to ERP button. The sync to ERP button is pretty simple. I click this button, it's going to create the item in QuickBooks. So I'm going to click that. So if I go here, click this button, I can view it in ERP. This is going to open up a new tab. And as long as I'm logged into my QuickBooks system, it will bring me right to that item. All right, so now I have this estimate that was created. So the contracts in our system link to estimates in QuickBooks. You'll see that the project name is up here. We've got one line item because it's syncing to a single line item of general contracting, which is in my settings. The default income product is general contracting. So this is an estimate. That is an income. It's going to use general contracting. You see that's a single cost here, and yeah, it is synchronized with the owner that I selected. It'll create the customer if the customer doesn't already exist. In the case of a project, it will already exist. Now there's two parts of the estimates. So we have, in our system, of course, we have change orders. So contracts, and then we have contract change orders. So how that works is if I create a new change order, and I'm just going to add a single line item and say it's going to be demolition, and I'm just going to say it's a $200 change order. I'm going to approve that, and I'm going to save it. So I've got this new change order here for this contract. It is not synchronized. Now the contract is synchronized, but if I click the change order, it is not synchronized. That the synchronization of the change order is separate. It has to happen when they choose to. Now, it will happen. Let's say I have a contract and 2 change orders before I've ever synchronized the contract. That will synchronize the change order. So when you click synchronize on a contract, you're synchronizing not only the contract itself, but any of the approved change orders for that contract. Similarly, if I go to a change order and the contract for this change order isn't synchronized yet, it will synchronize that change order or the contract and all approved change orders. So it's effectively the same thing, whether you're on the change order or whether you're on the contract that the change order is associated with, and you click synchronize. It synchronizes all approved fees or costs for that. And it will synchronize it to a single estimate. So if I click sync to ERP here, you see here now I have the same estimate, but I have another line item. So it's referencing the change order that it came from. It's the single line item for that. So if I have one contract and one for each change order. Now, keep in mind, this is if I have single line item export turned on. If I don't have that turned on and I have all my trades linked to products in QuickBooks, I'm going to have one line item per linked trade or per linked cost code. All right, so yeah, so I've synchronized my contract and all contract change orders to my estimate, and I can always see what's actually synchronized. If I go to the item, I can see it's synced to ERP. All right, so I'm going to stay on the receivable side of things. So you have the contract, you have the contract change orders, and then ultimately you have the receivable invoice. So I'm going to create a new invoice, and I'm just going to enter in some random due dates here. And I'm going to create that. Go to my schedule of values. I'm going to add all of my available line items. And then I'm just going to do 50% on all of these here. And I'm going to approve that. So now I've got an approved invoice for 50% of each of the line items. Trade shows correctly. And then I can go to the Sync to ERP button right here, just like on the contracts and contract change orders. And it will synchronize this to an invoice in QuickBooks. And you can see here I have a single line item for $69.49.98. It selected the owner, selected the invoice, due dates properly based on the selections, and it created the invoice. So this invoice can then they can collect payment on this invoice. Now, if I go to here, let me just show projects really quick. So if I go to the demo project on QuickBooks, I can actually see the income. So I can see that invoice that I just transferred over as income. And any costs that are going to be brought over will show up in costs. And you'll see those as we get to the actual cost stuff. The invoice has been approved. We know we can actually send this to our client. So we're going to synchronize it. All right. So I'm going to go to commitments. And you'll notice that commitments, the process will be identical. The only difference is that the item that it creates in QuickBooks will be a purchase order instead for a commitment. So I've got this commitment here. I've got a demolition line item, just a single line item for $2,700. It's not synchronized yet. So if I click sync to ERP, so we have this subcontract synchronized over here. And if I go to my transactions on that project, you'll see the new purchase order that showed up. I can click that purchase order. I can do the same thing in here where I can drop down view an ERP. I'm already in there, so I'm viewing it. So I can see it created the vendor automatically. It has their address in here. It has the purchase order date that I selected. It has the single line item of subcontracting because I selected that expense product to be subcontracting. So anything that is an expense, purchase order, or a bill will be a subcontracting product. And then the description is the item that it came from, the subcontract that it came from. And we have the memo here, which we just let them know it was imported from a project and what project it was imported from. I'm in here. I'm going to go create a new invoice. I'm going to bill 50%, or I'm going to be billed 50%. I'm approving an invoice, or I'm approving a bill from my subcontractor for 50% of the contracted value. And then I can synchronize this to the ERP system. Once you have this invoice synchronized, I can view it in the ERP just like I can every other item. It is a bill in the QuickBooks system. And you see the mailing address, everything transfers over. And of course, the single line item. So just like the purchase order that it just created, it creates this invoice. And I can see, the amounts and everything, and I can actually bill this. So like in QuickBooks, I could actually save and schedule a payment and send this person a link to actually pay for this. And then we get to direct costs. So direct costs synchronize to the expenses side. So our goal was to allow users to create direct costs in our system still. So I can create a direct cost. What they'll end up doing most of the time is they're going to create an expense in the QuickBooks system, and they want that cost to then show up in their Pantera system. So the sync to ERP is the same process as the commitment. What I'm going to show is the other side of it, which is the more common use case, and that's if somebody creates an expense in QuickBooks. So I'm going to go to my QuickBooks, and I'm going to go to the project that we are in. So I can create this expense here. And this is where you get into the synchronization back to our system. So in the settings, sync costs from QuickBooks is enabled, and import costs in a single cost code is enabled. So what that means is anything that I add to this expense here, if I add 20 different lines, it doesn't matter. It's always, as long as their products in QuickBooks are linked to the cost code on our system, the cost per line item will map to that budget cost code as well. All right, so I'm just going to add that. I'm going to make it a billable expense. Let's say it's $1,500. So I've created a $1,500 expense, and I'm just going to go ahead and save that. All right, so now if I go to my cost here, you'll see my cost updated. And if I go back to my project, so this is where we get into synchronizing costs back from QuickBooks. Currently, it is a daily process that happens every night automatically, but the user can do it manually at any time. As soon as it synchronizes once, it's not going to synchronize that again unless it changes. So you can see that direct cost here. So that $1,500 cost was synchronized back into a direct cost for $1,500, and it was synchronized into my general contracting other because general contracting other is my default. And the synchronization occurred back to a single line item, general contracting other, and then I can go to my direct costs here, and I can actually see that expense here. I can go into my direct costs and see that here as well. So I have that 01 that I created that I never linked, and I have the automatic one that's synchronized back from QuickBooks. So as this, as you start scanning receipts and everything, at the end of the day, it's going to bring those in automatically. Otherwise, they can just go to budget, they click sync to ERP, and at that point in time, it's going to synchronize anything that hasn't automatically been synchronized since the last point in time. And really the goal here is to make it an accurate depiction of what costs are on the project. So at the end of the project, your costs and your invoiced amounts and everything in this system will match QuickBooks one-to-one because we're synchronizing the costs back from QuickBooks. And of course, we're synchronizing the costs to QuickBooks too. So if I create a direct cost here, it's going to synchronize and create an expense in QuickBooks. If I create it in QuickBooks, it's going to synchronize and create a direct cost in our system.